Hey guys, in this video, I'll be showing you how to invest into real estate without using all or any of your savings. The reason being is because it's really hard for people to save a lot of money, 10, 20, 30, 50,000 dollars for down payments over the time. And especially for people that don't make as much. Let's say your annual income is anywhere between 30 and 50,000, even $100,000 earners a year. It's hard based off lifestyle and other things to actually save 50 to 100 grand down on an investment property. So because of that, that's the problem that I'm trying to help someone solve. So if this helps you, please like, comment, let me know. Anyways, first things first, it's going to be simple. It's just 4-step process, really. This does not look simple, as I just mentioned, but it is. So first step, you want to optimize your personal credit report. These bullet points 1 through 5 are basically just pre-underwriting measures that I threw in there. So if you're looking at how to figure this out, go to one of my other videos that goes over credit report, but we're just going to keep it on track, simple, and on time, cutting the fluff. So optimize personal credit report. Deal with these 3 pre-underwriting measures. Make sure your score is around there. Next step, you're going to go to, once you have good credit based off these, then we're going to go and make sure that you have an LLC, a business entity, limited liability company. Reason being is because those are the best structures for real estate. Some people argue S Corps, C Corps. I've invested in real estate, and when it comes to title companies and other things, it gets a lot messier when it's a corporation, because then they take into effect stakeholders and stock shareholders when sometimes you don't even have stock. So it halts the process, prolongs it. It's unnecessary. LLCs are the way to go. Basically, once you have an LLC, you want to make sure you're in a good industry. You want to make sure that it's optimized and structured properly so that your industry can actually be appealing to the banks for them to allow funding for you, if that makes sense. Let me know. If not, I will have another video on that. But for now, let's keep it on track. So first things first, you want to optimize your personal credit. Second, you want to open up an LLC. You want to make sure it's structured properly and it's not blacklisted with any terms or any industry codes that are high risk. Then once you have your LLC filed, you have a good personal credit, you have a business bank account for your LLC, then we're going to go in and we're going to do a business funding process. So how that works is usually you have to understand things like application sequencing, strategic funding acquisitions, private banking relationships. Those 3 things plus a couple other are really vital in making sure that you can get large, high limit approvals. So boom. Reason why I'm talking about approvals, I thought, hey, we're getting into real estate investing without savings. Well, yeah, how do you think we're going to do it? You do need money, but let's just not use your money. Let's use the bank's money. So that's what this video is about, using the bank's money at zero cost to you other than your credit and then opening an LLC, right? So then boom, once you go through the business funding process, you're going to basically stack applications. So you're going to have stacked accounts. One might be a line of credit at 75,000. There's a couple banks that I have really good relationships with. Some, an example, are like Chase, or you can even go with American Express. You can do Citi, but all, like I said, with a private network, you have to have a private relationship with a high level banker. These are bankers that you can't just walk into the branch and connect with. You actually need to do some digging or go through someone who is a business funding consultant, because they've already took the time to lock in those relationships. Kind of hard to lock in, but if you can do it on your own. It's just you're gonna have to claw your way in there. So boom, step 3. Once you have your optimized personal credit, you've structured and made sure that your LLC is properly structured and fundable, then we're going to go and fund it. Once we fund it, we're going to use business credit because it has 0% intro periods. Some business lines of credit are single-digit APR, which are awesome. Once you get approved for those, you're basically going to liquidate. Screenshot this because we're running out of time. This is basically just how you can liquidate, turning your credit into cash. Then you're going to contact the mortgage lender and you're going to pre-qualification, and we're going to go with a DSCR loan because a DSCR loan cancels out all financials. You just need to bring the down payment, which you get from your funding, and that is how you do it. In 5 minutes, no fluff. Boom. Screenshot if you need.